Hello students. So in the last session we have done with the deductions of category ATC. So in this session I'm going to explain of other deductions of various categories. So let's see deductions under section ATC, ATE and ATGG. So we have seen ATC category is for particular expenditures like expenses on property registration and tuition fees paid for education for maximum 2 children. Then ATE category is for interest on education loan. So if the assessee has taken any loan for higher education purpose of self or his spouse or children, so any interest paid on such education loan will be allowed as deduction under section ATE. So the amount of deductions will be entire amount of interest will be deductible. How much amount of interest is paying on education loan, that entire amount will be allowed as deductions for 8 years. So it will be allowed from the date of education loan taken to the 8 years. For the 8 years it will be allowed as deductions. Next, ATGG. ATGG is for deduction for house rent paid. So this will be allowed to the assessee who is not taking HRA from the employer or the company, who is residing in rented house. So he will be allowed to claim deductions under section ATGG. So under this category the amount of deductions will be least of the following 3 conditions. Those are rent paid minus 10% of adjusted gross total income, government notified limit of 5,000 per month, then 25% of gross total income. So whichever is least, that will be allowed as deductions under section ATGG. So next, very most important, so deductions under section ATD, ATDD, Ddb and ATU. So it is most important deductions in the case of income tax. So first, ATD, medical insurance premium on self, spouse, children or parents. So this section permits deductions on amount spent by the individual towards the premium of health insurance policy for self, spouse, children and parents. So any health insurance taken for self or for assessee himself or spouse or wife or children or parents, that will be allowed as deductions under section ATD. So then what will be the amount of deductions? So under ATD, deductions up to 25,000 for self, spouse and dependent children, and extra separate deductions will be allowed for parents rupees 25,000. That means for self, spouse and children will be 25,000 separate. For the parents it will be separate rupees 25,000. So if the parents are senior citizens, that means above 60 years or super seniors. So if it is senior citizens above 60 years, instead of 25,000, so the maximum amount of deductions will be 30,000 will be allowed as premium for health insurance to claim as deductions. So medical insurance also covers preventive medical checkup treatments. So that will be the maximum limit of rupees 5,000. So the entire amount, finally the maximum amount or the aggregate amount of deductions under section ATD must be not more than 55,000. 25,000 for spouse, self and dependent, and 30,000 for parents, including 5,000. So it should not be more than 55,000 for claiming deductions under section ATD. So I am telling again. So ATD is for medical insurance premium. That means if the assessee or individual has taken health insurance for himself or spouse or in the name of children or in the name of parents, he can claim deductions under section ATD up to rupees 25,000 for himself, spouse and dependent, and separately and extra 25,000 for his parents. So if the parents are senior citizen above 60 years, it will be up to 30,000. So the medical insurance also includes or covers preventive medical checkup. If the parents are undergone for medical checkups, or if the dependent children's or spouse or assessee himself undergone for medical checkups, so he can claim 5,000 as deductions under section ATD. Next, section Dd, expenses for rehabilitation of handicapped dependent relative. So deductions of expenses incurred on medical treatment, nursing, training and rehabilitation of handicap dependent relatives. So if the assessee, if the dependent relatives like children's or wife or father or mother. So if any such kind of persons are severely disabled or severely dependent, handicapped or disabled, in such case he can claim deductions under section 80 DD. So amount of deductions will be, so it can be depending on percentage of disability. So where the disability is 40% or more but less than 80%, a fixed deduction of rupees 75,000 is to be allowed. Where in case the disability is 80% or more, a fixed deductions of rupees 1,25,000 is permitted. So that means if the percentage of disability is 40,000 or more than 40,000 and less than but less than 80%, more than 40% but less than 80%, so he can claim 75 rupees as deductions. If the disability percentage is more than 80%, he can claim 1,25,000 as deductions. Under section 80U, it can be claimed only by individual taxpayers who have disabilities. So the major differences between 80 DD and 80U is 80 DD will be given to the assessee's relatives, not to the assessee. So he can claim if the expenditures incurred on the rehabilitation of handicapped dependent relatives like a spouse or children or father or mother. So if any expenses incurred for himself on the diseases, that will be allowed under section 80U. It can be claimed only by individual taxpayers who have disabilities. So individuals who have been certified by relevant medical authorities to be a person with disability can claim a maximum deduction of rupees 75,000 per year. So individuals who have severe or serious disabilities or major disabilities are entitled to have maximum deduction of rupees 1,25,000. So overall, under section 80 DD and under section 80U, so if the assessee himself or if the dependent relatives are disabled or dependent disabled or suffering from any disabilities, so the assessee can claim entire a fixed amount of deductions irrespective of expenditure incurred. For example, so here the assessee has incurred expenses for rehabilitation of handicapped dependent relative of rupees 25,000. So the percentage of disability is 50%. So if the assessee has 50% of disability and the if the assessee is dependent, if the for example his father has 50% of disability and he has spent rupees 25,000 as expenditures. In such cases, the assessee can claim 75,000 instead of 25,000 because irrespective of expenditure incurred or if the assessee spent expenses or not. So if the assessee's dependent relative or suffering from any disabilities, any disabilities, so he can claim a fixed deductions. A fixed deduction of rupees 75,000 is to be allowed instead of expenditure incurred. Similarly, in the case of 80U, so if the assessee is certified by a relative or relevant medical authorities as the assessee is suffering from disabilities, so in such cases he can claim a fixed amount of rupees 75,000 or 1,25,000 depending on the percentage of disabilities. Next, 80 DDB, deduction in respect of specified disease for self or dependent relatives. So this section 80 DDB provides provision for deductions on the expenses incurred by an individual towards medical treatment of certain diseases. The diseases have been specified in Rule 11 DD and it includes neurological diseases, cancers, acquired immunodeficiency syndrome, AIDS, chronic renal failure, hematological disorders. So if the assessee himself or his dependents are suffering from any of these diseases, so the assessee can claim deductions under section 80 DDB. Then amount of deductions will be actual expenditures incurred by the assessee or government notified limit, whichever is least. So whichever is least on these two categories, that will be taken as deductions. Then what will be the notified limit? Specified limit in case the person on behalf of whom the payment is being made is as follows. So if the citizen is aged below 60 years, so it may include self or spouse or children or father or mother. So if the citizen is below 60 years, the notified limit is 40,000. If the senior citizen, that means aged above 60 years and but below 80 years, the maximum limit will be 60,000. And the super seniors aged above 80 years, those can be claimed as per the notified limit of rupees 80,000. So then amount actual expenditures incurred, whichever is least, that will be taken as deductions under section 80 DDB. So in simple form, 80D is for medical insurance on self, spouse, children or parents. So amount of deductions will be rupees 25,000 for self, spouse and children, extra 25,000 for insurance on parents. So if the parents are senior citizens, 30,000 will be extra. The next, so insurance includes preventive medical checkup of rupees 5,000. The next, 80DD is for treatment for physical disabled dependent relatives, that means rehabilitation of handicapped dependent relatives. So this will not be allowed to the assessee himself. This will be given only to the, means this will be related to the dependent relatives. So the amount of deductions will be a fixed amount of rupees 75,000 in case of minimum disabilities, and in case of severe or maximum percentage of decreases, in such cases he can claim a fixed deduction of rupees 1,75,000. So next, 80DDB, medical treatment for self or relatives suffering from specified diseases. So if the assessee himself or spouse or children or parents are suffering from specified diseases notified under section 11DD by the income tax authorities, so the assessee can claim deductions under section 80DDB. The amount of deductions will be, so actual amount of paid or actual amount of expenditure incurred or government maximum limit, whichever is least. In case of citizens below 60 years, maximum limit will be 40,000. In case of senior citizen but less than 80 years, maximum limit will be 60,000. If the super senior citizens, maximum limit will be 80,000. Whichever is least, that will be taken as deductions. And 80E is for interest payment on loan taken for higher education or higher studies. So if the assessee has taken loan for higher education for himself or spouse or children, on such loan any interest paid, that will be allowed as deductions. Entire amount of interest will be allowed as deductions under section 80E. How much amount of interest he is paying, that will be allowed as deductions. Moreover, this benefit will be availed by the assessee for 8 years from the beginning of repayment of first year, or repayment of interest or repayment of loan from the first year. So now let's see some practical illustrations. So how to find out taxable total income in the case of 80D categories. Let's see some practical illustrations. So here, on 1st December 2010, Mr. Farhan joined as an aeronautical engineer in Hindustan Aeronautical Limited, Government of India. His taxable income from salary during the previous year 2018-19 amounted to rupees 8,55,000. He also earned interest of rupees 18,000 net on bank fixed deposit and rupees 9,000 on savings bank account. So these three are incomes of the assessee in the previous year. So he had joined in the as a aeronautical engineer in the 2010, but these are all the incomes of the previous year. So those are income from salary. Then these two interest has to be taken as income from other sources. So here they have given interest on bank fixed deposit. So it is a kind of income from other sources. They have given net balance. That means if the amount of interest on bank fixed deposit is more than 10,000, that should be grossed up by 10%. So here, if they have given net, it should be grossed up by the 10%. That means 18,000 into 100 divided by 90. So interest on savings bank account, it is income, it is an income under income from other sources, as well as it is a kind of deductions under section 80 interest on savings bank account. So under deductions under section 80 the assessee can claim up to 10,000 with respect to the interest on savings bank account. So first it should be taken as an income for the calculation of gross total income, then later it should be deductible under section 80 under deductions. So next, he claims the following deductions made out of his salary income in previous year. So he had done various investments, expenditures and various insurance. So in the previous year he claims for deductions. Those are investment in notified mutual fund rupees 60,000. So first we need to categorize which kind of deductions, or these deductions are which comes under which categories. So first, investment in notified mutual fund rupees 60,000. So it is deductible under section 80C. Then contribution to LIC pension scheme rupees 1 lakh. It is also deductible under section 80C. Voluntary contribution to NPS. Any kind of contribution made by the assessee himself or employer, that will be taken as additional deductions. The maximum allowed as deduction under section 80 CCD 1B NPS new pension schemes is 50,000. Up to 50,000 you can claim deductions. So here we have two ATC categories of deductions. So the aggregate of ATC, ATCCC, ATCCD 1A should not be exceed more rupees 1,50,000. So here the total amount of ATC category is 1,60,000, but as per the limit up to 1,50,000 you can claim deductions. Next, interest on education loan taken for wife's higher education rupees 35,000. So it is nothing but interest on education loan. It is deductible under section 80E. So entire amount will be deductible. Medical insurance premium. So he has taken insurance for self, wife and father. So medical insurance premium is deductible under section 80D. Under 80D, for self, spouse and children, the maximum amount will be 25,000 and extra rupees 25,000 is to be allowed for parents. It includes preventive health checkup of rupees 5,000. So here in this case, medical insurance premium 80D for self is 15,000 and above it is less than the limit. Prevention health checkup for himself rupees 7,000. That means he spent rupees 7,000 for the health checkup, but he can claim up to 5,000 as health checkup deductions. Then for wife rupees 8,000. For his father, he is a senior citizen, he is above 60 years. So for the senior citizens, the maximum limit of deductions under section 80D is 30,000 instead of 25,000. So you can claim up to 30,000 as deduction from the tax authorities under section 80D. So how to find out taxable total income for the assessment 2019-20? Like calculation of total income of Mr. Farhan for the assessment 2019-20. So for the purpose of calculation of total income, first we need to find out gross total income. It is nothing but it is the aggregate total of all the heads of incomes after making adjustments and provisions. So here they have given three incomes. Those are income from salary rupees 8,55,000, and he had earned interest on bank fixed deposit that is more than 10,000, that should be crossed up. 18,000 into 100 upon 80, 20,000. Then interest on savings bank account. First it should be taken under the gross total income, then later it is deductible under section 80TTA as interest on savings bank account. For the deduction purpose, the maximum limit is allowed for interest on savings bank account is 10,000. So gross total income will be 8,84,000. So from this less deductions under section 80C to 80U. So first, investment in mutual fund rupees 60,000, that will be deducted under section 80C 60,000. Contribution to LIC pension scheme under section 80C rupees 1 lakh. So here the aggregate deduction from 80C category is exceeding rupees 1,50,000, but he can claim up to 1,50,000. Next, he incurred voluntary contribution to NPS rupees 70,000. It is a kind of additional expenditure deductions under section 80C CD 1B. So it will be allowed up to 50,000. That has to be taken. Next, interest on education loan taken for wife's higher education rupees 35,000. So here the assessee has taken loan for higher education of higher educating the spouse. So on that loan he has paid interest of rupees 35,000. Entire amount of interest on education loan will be taken as deductible. Next, medical insurance premium. He has taken health insurance for self, spouse and father. So for that he is paying premium of health insurance. So those will be deducted under section 80D. For self 15,000, because entire amount will be deductible because it is less than the limit. For health checkup he has spent 7,000, but the limit will be 5,000. Then for spouse rupees 8,000, his father rupees 32,000. If the parents are less than 60 years, the maximum will be 25,000 has to be allowed. If the parents are senior citizens, that means aged above 60 years, so the maximum limit will be 30,000 instead of 25,000. So here he is paying premium of health insurance on parents rupees 32,000, but he will be allowed to claim up to 30,000. So as I said earlier, the aggregate of 80D, the total of deductions of 80D under section 80D must not be more than 55,000. So here the total will be 15 plus 520, 828 plus 30, 58. But the assessee is allowed to claim deduction under section 80D will be maximum 55,000. So instead of 58,000 we should take only 55,000 as deductions. Then 80 TTA, interest on savings bank account rupees 9,000. Total amount of deductions. So by taking the sum of all the deductions, the total will be 2,99,000 and the balance of rupees 5,85,000 is the taxable total income. So here we have some notes. The aggregate deduction under section 80C, 80CCC, 80CCD 1A should be allowed maximum of rupees 1,50,000, not more than that. An additional deduction allowed for contribution to NPS is 50,000. Medical insurance, maximum amount of deduction for self, wife and children is 25,000, and extra or separate 25,000 is allowed for parents if the parents are less than 60 years. If the parents are more than 60 years, senior citizens, 30,000 will be allowed as deductions instead of 25,000. As well as medical insurance includes preventive health checkup. So if the assessee has undergone or if the assessee has taken any health checkup for spouse, children or parents, so he can claim preventive health checkup deduction of rupees 5,000. The aggregate of 80D should not be more than 55,000. Next, interest on savings bank account is deductible up to rupees 10,000 as section 80 TDA. So it is nothing but calculation or computation of taxable total income under section 80D, 80DD, 80DDB. So now you will be having two illustrations. So find out or compute total taxable income. So I will explain the category means transactions or criteria of transactions. So in the first illustrations, Mr. George severely disabled. So here be careful, the assessee himself is severely disabled. So presents is financial data for the previous year 2018-19. So firstly, if the assessee himself is disabled severely, that will be allowed as deduction under section 80U. So if the assessee himself is disabled or suffering from disability severely, that means more than 70-80%, more than 80%, that will be taken under section deductions under section 80U. So if the assessee spent money or incurred expenses or not, irrespective of incurrence of expenses, if the relevant medical authority is certified that assessee is suffering from severe disability, a fixed amount of deductions will be allowed as deductions. That is, if the disability is 40 to 80%, 75,000. If the disability is more than 80%, that will be 1,25,000. So here under section 80U, the assessee can claim 1,25,000 as deductions. That should be taken. So it is most important in the case of 80D categories. Next, business income rupees 7,35,000. It is a kind of income from business. It should be taken for the purpose of calculation of gross total income. Payment of medical insurance premium on own life. So it is deductible under section 80D. Entire amount is deductible. He pays rupees 20,000 to general insurance company for maintenance of his severely disabled son under an approved schemes. It is deductible under section 80DD because rehabilitation or handicap dependent relatives, medical expenditures incurred on dependent relatives or dependent son, spouse or parents. So here they have not given kind of diseases, so that's why it is deductible under section 80DD. As we know, under section 80DD, to claim deductions under section 80DD and 80U, a flat reduction of rupees 75,000 in case of minimum disability and rupees 1,25,000 for severe disability is applicable irrespective of whether expenditure incurred or not. If the assessee spent or not, if the assessee incurred or not, whatever it may be, if his dependents or himself is certified as suffering from disabilities, they can claim a fixed amount of deduction of rupees 75,000 or 1,25,000 as deductions. In this case, so the assessee can claim deductions under section 80DD of rupees 1,25,000, not 20,000. The next, he has borrowed rupees 8 lakhs as the education loan for his younger son who pursue MBA from IIMB and pays 10% interest on loan. The assessee has taken 8 lakhs as education loan for the higher education of his son. On education loan, he has to pay 10% as interest. It is nothing but interest on education loan and deductible under section 80E. So 8 lakhs into 10%, 80,000 is to be taken as deductions. He purchased house worth rupees 50 lakhs, expenses on stamp duty registration rupees 2 lakhs. It is deductible under section 80C because incurred on specific expenditures. So as we know, under section 80C, the maximum limit must not be exceed rupees 1,50,000. So instead of 2 lakhs, we should take 1,50,000. So after making of all these adjustments, so the balancing will be total taxable income. So in the next illustration, Miss Nisha is a doctor working in a private hospital for taxable salary of rupees 8,25,000 per annum. So it is nothing but income from salary. In the evening, she operates a clinic at her residence from which she earned rupees 1,75,000 in the previous year. It is income from profession. So the assessee is a doctor. So she is working in a private hospital for the salary of rupees 8,25,000. So after the duty, so in the evening she operates a clinic at her residence and earned rupees 1,25,000 in the previous year. So these two are incomes from various heads of incomes. One is from income from salary, another is from income from profession. So these two must be taken for the calculation of gross total income. She has made the following investments deposits during the previous year 2018-19. Interest of rupees 2,852 on NSC, so purchased during 2011-12, has been credited during the previous year 18-19. It is deductible under section 80C. The next, contribution to unorganized provident fund rupees 25,000. So it is not eligible because if the assessee wants to claim deductions under section 80C, that should be made under recognized provident fund. So if the any investment made in the unrecognized provident, that is not eligible for claiming deductions. The next, contribution to public provident fund, it is eligible as deduction under section 80C. Investment in unit linked insurance plan, ULIP, it is also deductible under section 80C. She has paid education fee for her 3 children. So it is nothing but special particular expenditure incurred on by assessee on his children. So here the assessee has incurred 3 payments. Those are Sita's tuition fees, admission fees and school donation. But the assessee is allowed only for tuition fees. So she cannot be allowed to claim deduction for admission fees and school donations. So she can claim only tuition fees for deductions under section 80C. So these 2 expenses are not to be allowed as deductions. Only tuition fees must be taken, 22,000. Life insurance premium, policy taken after 1st April 2012. So here the dates are given for the purpose of identifying the maximum limit. That means, so before that, so the assessee has taken life insurance on his own life, brother's life, elder son. So life insurance premium is to be allowed as deductions if it is taken for own, spouse and children. So other than these, any life insurance taken by the assessee, that will not be allowed as deductions. So that means in this case, so the assessee can claim deductions on his own life and elder son. So brother's life will not be allowed as deductions. Amount of deductions under section 80C will be 10% of sum assured or amount of premium, whichever is least, that should be taken as amount of deductions. That means 10% of sum assured, 8 lakhs into 10%, 80,000 or 8,000, whichever is least, that should be taken as deductions. Similarly for elder son, so 80,000 or 5,000, whichever is least. If the policy is taken before 1st April 2012, instead of 10%, it will be 20%. For that purpose, they'll give the date of insurance policy taken. So after making all the adjustments, by balancing the deductions, the remaining balance or the result will be taxable total income.